Hi, it's Michael Farr. Thanks for joining me again for one of our video updates. Go Nats! We're going to the World Series. How cool is that? First time since 1933. I was a lot younger in 1933 when I was attending the series, but I'll tell you more of those stories later. It was a great series back in 33, and it lifted us spiritually, lifted our hearts and our sights out of the Great Depression. It was pretty cool. We don't need that this time, and we're going to the series in Washington, D.C. It's going to be awesome. Wait till the Nats win the series. We've had a lot of news going on in markets, and I wanted to share a few thoughts about what I think is happening currently, what I think we can expect through the end of the year and probably the beginning of 2020. My message for you is that growth is kind of okay, and okay is okay. Let's not look this gift horse in the mouth. Lots of people are worried. There are a lot of hand-wringers out there, lots of Cassandras who are trying to tell us why everything is much more horrible than it is. It's not great, but it's not horrible. Earnings have been in line pretty much with last year. Last year was a really good year for earnings. We had the benefits of that big tax cut and spending bill. Earnings were really strong in the third quarter of 2018. 2019, we're about the same place, maybe slightly better, but slightly better from a really strong point is okay. Let's go with my theme. It's okay. Economic growth. There are more headwinds now than there were 6 months ago, largely from the trade war with China, this big disagreement, and we're continuing to see stresses from Brexit and trade in Europe. Other economies are slowing, but it's okay. Economic growth is okay. There are some, strengths that I look to for economic growth. 3.5% unemployment. So you've got a whole lot of the consumers out there employed. We've seen modest, moderate wage gains. They're continuing slowly, but that puts more money in consumers' pockets, and we know that 96.5% of the entire available workforce is employed. So the consumer's okay. They're spending okay. No one else in the world more predictably or more effectively spends every nickel you put in his or her pocket than the U.S. consumer. As long as they're making a little more money, they'll spend it. And another little bit of a bright light, the housing market is actually picking up a bit. Interest rates have come down so low, mortgage rates have come down so low that we're beginning to see activity again. And that's great for carpenters and electricians and folks who work in concrete and construction. It's great for stores like Home Depot and Lowe's. It's good for those consumers who go to their DIY projects and spend money in the economy. That part of the consumer is doing fine. Corporate spending, how much money are corporations spending building new plants, new equipment, hiring new people? The answer is none. Corporations are not spending. Corporations are not spending for a couple of reasons. One, they don't have a clear outlook as to what's going on in the economy. They don't know what's going to happen with China and whether they can continue to sell into China for those big corporations that are doing business with China. They don't know if Europe is going to be able to maintain any semblance of strength no matter what their central banks do, given Brexit or also trading pressures with China, and what this pullout of Syria means, and what negotiations with Turkey mean, and what's going to happen in Iran, and what is all of that going to mean if you are a corporate CEO thinking about deploying your capital. By the way, I believe that that's the most significant responsibility of a big corporate CEO. How do you deploy capital? And when do you deploy capital? Well, right now, given all that uncertainty, it makes sense you'd be sitting on your wallet. The other half, the other part two of why corporations really aren't spending money and haven't been for a while, there isn't demand. They don't have long lines clamoring outside of their doors to buy more donuts if only they would make more donuts. They're not. They can make more donuts, but they just don't have anybody else to buy them. But remember what I said in part one. The consumer is still okay. We're seeing some wage gains. The consumer will spend money that goes into the consumer's wallet, so maybe the consumer is starting to buy a few more donuts, and maybe that demand will build. We can hope. A lot of this spending, as you just heard me explain about the corporations, one, they don't have the demand, but two, they don't have the confidence. That confidence is key, isn't it? Did you understand it when I said it? Does it make sense to you when I talk about that uncertainty? If you were a CEO of a big corporation, maybe Procter & Gamble or something, and you say, well, yeah, I guess I wouldn't go out and build a new plant right now until I knew what those foreign markets were going to do and how all of this stuff's going to react. I think I'm just going to wait it out. If that makes sense to you, then you understand the greatest risk that I see to the consumer. I've written over the summer that we needed to be careful not to talk ourselves into recession. If the consumer somehow loses confidence in this even slowly growing economy and decides to start stuffing money into the mattress for some rainy day, that will send us into recession. Remember, U.S. consumer, 96.5% of the potential workforce is employed. They are starting to make a little bit more money. This is good things. Interest rates are really low. Mortgage rates are really low. So they are able to refinance. Refinance is important because it gives the consumer even a little bit more money every month they can go out and spend. And those first-time home buyers who couldn't afford to buy a house before are making those decisions to buy, and that creates new homes and all of that sort of demand. While we have argued that lowering interest rates, which the Federal Reserve and other central banks seem intent upon doing, while lowering interest rates isn't going to change the thinking for corporations, where they're not going to go out and add more plants and equipment and jobs, the consumer with a lower mortgage rate will. And the consumer represents 2/3 of the U.S. economy. So I think that these lower rates at these levels are encouraging economic growth, and they're having a real effect, and we're beginning to see it in the consumer. So don't despair entirely. We're plodding along. It's okay. Federal Reserve and central banks, they're kind of pushing on a rope. I think that they are running dry in terms of their efficacy of the next rate cut and how much they're going to change, as I said, the corporate behavior. Consumers seeing mortgage rates the consumer likes. We need to keep that consumer feeling good. We need that consumer bullish on America. Not a plug for Merrill Lynch. The president has said that the trade war was something that the U.S. was strong enough to endure, that our economy was strong enough to endure the pain of a trade war right now. Now, the president may be right, and the president is taking on a trade war that might be the only thing in Washington that both Democrats and Republicans agree upon. For as much as you may like or not like this president, everybody agrees that China has been a really bad player in the world economic stage. How? They have been stealing intellectual property, and they have been stealing technology, among other things. What do I mean? I mean that in the U.S. we have patents and we have copyrights and we have property laws, which our courts will uphold. I can't just download and copy Apple's iOS operating system on my new Farr phone and send it out there and say it's just as good as an Apple because I've just stolen their equipment. Apple's going to sue my ass, as well they should, and I'm not going to be able to use that or sell it or pass it off as my own. Not so in China. They can take the whole thing. They're not paying royalties. And in all of these negotiations, the most response we seem to be getting right now is, well, we'll buy more soybeans from you. Oh, yippee. I mean, we'll take your money, but that doesn't get to the point. So the president's in a very tough situation right now because he is waging a battle on behalf of the United States economy and indeed global economies to get China to try and behave and to play fairly on the world stage. It is hurting our economy and hurting his chances for re-election. How that all ends up, I don't know. The president seems to be very fond of his own self-interests. I don't know how it all works out. But it's a very important fight. And as China continues to grow and the size of their economy continues to snowball, we will have less and less opportunity. The world will have less opportunity to actually confront them and hope to have an effect the bigger that they get. So now seems to be the time. This is one thing that President Trump is doing that everybody agrees should be done. Good luck, Mr. President. And by the way, whether you like our president or you don't like our president, and I don't really care over the years which president we may be talking about, I do tell people that I think all of us should probably say a prayer for the President of the United States every day. I think we all ought to pray that this is that this president can be the most successful we've ever had. That's in all of our interests to say a prayer for the President. Okay, now I'll be snarky. God knows this Donald Trump could use our prayers. Wow. So, short term, we've seen volatile markets. They've been all over the place, and people are reaching for Dramamine. Their stomachs have got the wobbles. Well, they should. Longer term, stock markets have been very solid. They've continued to climb. We are near all-time highs, and for all the volatility and for all the noise and for all of the missiles launched at the Saudi oil fields and for everything that's going on in Turkey, stocks are up 20%. Stocks are not cheap. If the rule is buy low and sell high, there is nothing low about these prices. We're seeing some growth, but this is a time, in my opinion, where caution is absolutely warranted. Now, risk feels good when markets are going up. Risk feels great when markets are going up and you're making money. Risk feels crappy when it's going down. It really hurts, and on top of it, you feel stupid, and you're going to feel more stupid after having watched me tell you about risk. You kept the risk, market falls at some point, and you go, oh, crap, I should have listened to Farr. Yes, you should have. And let's talk about a boring stock. Johnson & Johnson has a AAA balance sheet. Yes, they've had news headlines troubles, and yes, they've had real concerns. They just reported a good quarter. They increased their guidance. The stock has a 2.8% dividend. The 10-year U.S. Treasury has a 1.7% dividend. Johnson & Johnson, a global company that's growing, it's boring, but it's just fine. It's solid. I can get rich slowly in things like Johnson & Johnson. I'm not recommending that you buy or sell any security. Please check with your financial advisor before making any investments and all. Okay? Call us if we can help you. Don't listen to that just as a recommendation. I'm using it simply as an example. It's not a recommendation to buy or sell a thing. Risk feels good on the upside, bad on the downside. This is no time to be venturing into the thin branches of risk. Know what you own, and what I see in general is I see the consumer plodding along. I see stock prices plodding along. I see the U.S. economy plodding along. My great sincere hope for all of us is that it continues to plod along for more years to come. But as it plods from these fully valued levels and continues to grow and continues to be volatile, it continues to move ahead and plod ahead. It's not in awful shape. There are a lot of reasons to be concerned. But for the time being, I'm not worried, I'm not panicked, I don't see a recession. Even though one might start in 2020, it can't happen in 2020 in my opinion. And so I come back where I started. Okay is really okay. If we can help you at Farr, Miller and Washington, please give us a call. mfarr@farmiller.com. I'll try and answer all the questions I can. Jennings, Harry Jennings, @farmiller.com. Give us a call, send us a quick note. We're happy to help. Go Nats. Hope that you all have a terrific rest of the month of October here. Happy Halloween, everybody. We'll be back before year end. And you can also catch us every week on the Farrcast. It's on Apple iTunes and a lot of the other platforms, the Farrcast. We love visiting with you with our team of experts every week. Thanks for tuning in again. In Washington, D.C., for Farr, Miller, and Washington, I'm Michael Farr.